All right, welcome everyone. Welcome everyone to another Forex Bootcamp training that I do on Saturdays, roughly around 12 o'clock, but it's about 1 p.m. I had a slow start, so I'm going to go ahead and just dive into some training, dive into some content, give you an idea what I'm doing. In this particular training, I'm just going to just forecast a couple of pairs for next week. So we just analyze a couple of pairs, I'm going to use my trading plan. I'll show you exactly what I do as far as how to mark up the charts, and then we could screenshot the whole entire screen, and then try to apply a wait for a setup come when the market opens. So you could trade if roughly. I normally trade Monday, Tuesday, Wednesday, Thursday, and Friday. So I trade 5 days a week. Sundays when the market does open, I don't typically place a trade that day because the market's getting its bearings. It's not really doing much. And then on Monday morning, I take a look at my pairs and I trade the New York session, which is 9:30 a.m. And then I just wait for my setups to materialize. So let's take a look at gold right now. I want to dissect gold and see what it's doing and make some predictions. Of course, nothing's guaranteed. The market will do whatever it wants. But all we could do is try to set traps, right? Based on our trading plans. So you're always going to be the hunter, not the hunted. So you're going to be setting traps. And then when the market just develops or falls into your trap, that's when you place a trade. So let's take a look at gold. Gold is XAU USD. And this is a weekly chart. Okay. So basically, let's just take a closer look to see what's the first question we ask. Number one, what trend are we in? Okay, that's the very first question we ask. So if we squeeze this, okay, we could see based on what the market is showing right here, we're in an uptrend. Okay, we're in an uptrend. Because if I take my trend line and I pull it from the bottom, let's start here, and go all the way to the top, you see that it's pretty much trending upward, right? All right, and then if we take this tool, which is our path tool, we have low, a high, a low, a high, a low, a high, a low, a high, a low. Okay, but it didn't break this low, so it's still in uptrend. Then a high there, here, here. Okay, so it did break this low, so but it didn't trend low below the trend line, right? It bounced off the trend line, made another high, equal highs right here. It's like a triple top, then a low, and it made another high right here. It's higher than all these highs right here. Then a low, then a high, then a low, then a high. Look at that. All above all of these highs here. That's why I'm saying that we're in an uptrend. All right. So if you take the lowest low, okay, which would be right here, we go over here and place a trend line here. We have to pay attention to this line right here. Because if anything breaks below this line, if it breaks this trend line, you're looking at, the market making a change going to a downtrend, right? So that's typically what I do. Okay. So here's another tactic that I do. I take these horizontal lines, this horizontal raise, and I mark up my highs and lows. So this was a low. High. Another one here. Low. Get a low right there. It did come to this low, and then made a triple top, another low, high, low, high, low. Okay, so those are some really significant areas that I'm going to be taking a close look at when I go to a lower time frame. So let's now go to the 4 hour. I'm going to take this off here. Okay, so this is a 4 hour. Actually, that was a weekly, right? Let's go back to the weekly. There's one more thing I want to do on the weekly. Take a look at the last two candles. Because this is last week's candle, and you can see it's like a doji, right? Little body, long wicks. So what I normally do is take my horizontal ray, I mark out the high, and I mark out the low. Okay, because I really want to pay attention to this weekly activity to give me my bias for next week. All right, so we're going to drop down to a 1 day candle. Okay, and to kind of adjust things, right? I'm going to adjust this and put this up here because this was a high for the day. This was a low for the day. And you continue to do that. You're paying attention to the trend. Remember, it's an uptrend, right? We're just trying to pay attention to the trend. All right, so we're trying to pay attention to the trend. It's still an uptrend, right? Go down to the 4 hour and then make some more adjustments. The low and the high. Okay, look at that. It bounced off the trend line right here. Okay, I'm going to continue to go down to the lower time frames. As you can see, it's trading sideways, so it didn't make any higher highs. So if we put another line here, horizontal ray, it didn't make any higher highs. So it's got a couple of touches on this horizontal ray. 1, 2, 3, 4, 5, 6, 7, 8. So there's some resistance here, right? So the market's having a hard time breaking above this particular resistance. All right, so now we're going to go down to the 1 hour. Okay. It is kind of like trending sideways, but then there's like a breakout. If we put a box on a sideways trend, which is right here, we notice that it trend, the market couldn't make any higher highs and the market couldn't make any lower lows. It just continued to trade in this box here. It did try to do a breakout right here, but then faked everybody out, trying to tell everybody else like it's going down, but it faked everybody out and went right into the consolidation box. Okay. And it did do a breakout right here. We'll place close attention to that. With, you see, a downtrend here, breakout of the box, So usually we come back and retest, right? Typically, you'll come out of the box, retest it, right? To trend lower, right? So that's what I would be looking for, because what's giving me the indication that it's going to do that is this doji right here. Okay, because the doji it started to trend up, right? This is an uptrend right here, a little bit of an uptrend. But then the doji says it's going to be a reversal. So you pay close attention to this reversal. So typically this is a sign that it'll go up a little bit right into the box, maybe bounce off. That's one prediction. Bounce off the box and trend lower. Okay, so that's one prediction. Or it will go all the way back up here, bounce out of this, bounce off the breakout box here, and trend higher. You got two predictions. So this consolidation box, the sideways movement, can go two ways. All right. And it'll go either like this, or it'll go like this. Either or, you just got to be patient enough to before you take a trade. Do not take a trade with it inside this box, because it may stay in that box. You'll be trapped. Okay, you gotta wait for a breakout. So this is considered a breakout trade. Okay, so there's two ways it can go. It could go back up here and bounce off the bottom of this consolidation box, the breakout box, and trend lower. And what you'll be looking for is a candle that pretty much is going to give you an indication of what's going to do. If you see a bearish engulfing candle develop on the bottom of the breakout box, then it's going to trend lower. If you see a bullish engulfing candle, okay, and it bounces off the box, it'll go higher, right? So those are your indicators. So let me see if I can draw that. Okay, so it'll come back. And if it creates this particular, this is a bearish engulfing candle. So if it pops out of the box, going up.
Bullish.
Hey,
Bullish.
Mark, how you doing?
Hey, doing good, bud. Sorry, I didn't mute. Sorry.
It's okay. It's okay. All right. So basically, if you see this on top of the consolidation box, it's going to be a bearish engulfing candle. But that's a sign that's going to go continue to go up. So if we know this is an uptrend, this is what pretty much what we're waiting for. We don't want to trade, against the trend. Um, Even though it does, it may give you this prediction. It may trend lower, bounce off the consolidation box and go this way. And if it does do that, you just wait for the market to reverse back upwards. And that's when you would take your trade. So you don't want to trade against the trend. We've already determined that the trend is an uptrend. So this is what you pretty much be waiting for. All right. So I'm just giving you these two predictions here that it may do this. But in actuality, what we're really waiting for is for the market to do one of these numbers here. Okay. And then it shows you a bearish engulfing candle, and then you continue to ride this market upwards. And so that's what you'll be looking for. All right. So to recap, we looked at the weekly, to get our bias. Okay, this is a weekly. Delete everything. This is a weekly. We just stretch it all out, take a bird's eye view of what the market's doing. We take our trend line, we stretch it out from the bottom all the way up to the top. We notice that the market's trending upwards because of the fact that it didn't make any lower lows and it didn't go below this area, this area. So everything's just pretty much an uptrend. Okay, so you can take another horizontal line, ray, actually, arrow, take the arrow and do one of these numbers. So it's an uptrend. All right, so that's all uptrend. And then we go down to the lower time frame, daily. You notice that it's still an uptrend. So all we're going to be waiting for is an opportunity to jump into the market, right? Now, go down to the 4 hour. We're still in an uptrend. You just got to continue to confirm that with yourself. Still an uptrend, right? Go down to the hour. Okay, so the question is, okay, where are you going to jump in? You're going to buy low, sell high. Remember that is a rule of thumb. Low, sell high. So you're always going to jump in the market when it trends lower, like in a retracement. Okay, but you want to look for order blocks in order to take advantage of, the market. You got to find where your order blocks are. Okay, and based on the hourly here, if we switch this out, stretch this out, I should say. We're looking for order blocks. We're looking for in the market. We're looking for long candles, a long upward candle, like a long, strong upward candle that gives you momentum of it going up, with consecutive candles going up as well. Okay, so when you see all of this here, you're going to put a box at the bottom of this area here. Stretch it to the right and try to find your supply and demand areas, okay? Support and resistance areas, all right? So there's another long candle. You go to the candle before it, you put a box. Okay, you just look left, look for these long, thick candles here, right? And you just mark the candle before it, stretch it out, all right? Like here's one here, you can put it right here, and here's one over here, and you put one over here, candle before it. Okay, now these are your key areas. Now, what you're looking for in these key areas, right, are gaps where two wicks are not touching. So let's look for some gaps in there. So if we go down to the bottom here, are there any gaps? Okay, yes, there is a gap right here. Make it bigger for you to see it. You see this candle here? It has this wick on top. Okay, and then this candle here didn't come all the way down to touch that wick. So we consider that a gap right there. So you can color coordinate it and say, hey, there's a gap in the market. So this candle's wick did not come down. It didn't cover this area where this candle stopped. Okay. So that we consider that a gap. So typically what happens is the market has to come back and fill the gap. Okay. So if we're looking to place an uptrend trade, we're waiting for the market to come back to these areas where there are gaps. Okay, so is there a gap over here? Yes, there is. Okay. This wick and this candle's wick did not touch. We consider that a gap. Okay. All right, is there a gap over here? No, because this wick pretty much covered up this whole area here. There's no gap there. Is there a gap here? Yes, there's a gap there. This candle and this candle, there's a gap, right? Look what it did. It came back and filled the gap. This is what I'm talking about. So whenever you see this happening, okay, these are the areas that you want to pay attention to when the market comes back and fills those gaps. Okay. So definitely practice looking for these gaps. Okay. Okay, you see this? Delete this so you can see this gap right here. Okay. This candle and this candle, there's a gap right there. You can see it went up, came back and filled the gap, and continued to trend higher. This is where you place your trades. Whenever you come back, this is a retracement. It fills the gap, and you see this candle going up here. You place your trade on this candle right here. Okay. So we're just waiting for see the market fill this area here. There's that doji, right? And all we're waiting for is for the market to give you a buy signal. Okay. Because this whole area here is called support. You see how I did not break below support? Okay, so the market has a hard time breaking the support area right here. Or else, if it would have broke this support area, it would have did one of these numbers, right? Come out of support, come back and retouch the resistance. Now it's called resistance, and then trend lower. But since we're looking for the market to go higher, because we're saying that the market's an uptrend, we're just waiting for the market to go up. It could go up, right? Maybe touch this box, come back, touch this box, and trend higher. Okay. But remember, this whole area was considered resistance. The market couldn't break above resistance. And remember, we were all in that sideways consolidation. You gotta wait pretty much for this. For gold, you gotta wait for it to come out of the box pretty much. Your box. Okay, that's your box right there. You gotta wait for all this stuff for it to come out of the box. All right, so that is gold. Now let's look at another pair. So next week's prediction, my prediction is gold's going to pop out of the box and continue its uptrend. That's my prediction. So if it does break above these areas, again, you'll be looking for it to come out of the box, come down and retouch the box, and trend higher because it's an uptrend. And again, you're looking for a bearish engulfing candle, and you place your trade in this general area over here. Okay. Right. When you see that bearish engulfing candle, I'll place my trade right there and then put your stop loss below it. The stop loss will go below, like right here. Protect your account in case it goes the opposite direction. You don't blow your account, so it's really important to put your stop losses there. And then you take profit. It's going to be the next area. If we go back to, let's see, go to the monthly. We're going to look left and see if there's an area that we can set for take profit. Okay, so looking left, gold is making higher highs, so there's no way to set a take profit. So you'll have to set a take profit based on how many pips you want to make on this particular trade. 10 pips, 20 pips, 30 pips, and then you just trail your stop loss. If it goes above your break-even point, you just move your stop loss. That way you can lock in some profits. Okay. All right. So that's gold. Let's look at GBP USD. Okay. Okay, any questions out there? I know you guys are watching, but does anybody have any questions or concerns?
None from my end.
Yeah, go ahead. You can unmute yourself. Okay. All right. So let's look at GBP USD for next week. Clear the screen here. All right. This is the monthly, but let's go down to the weekly, right? This is the weekly. Well, you could start at the monthly because it does give you an idea what's going on in the monthly as well. Because it, pretty much is not making any higher highs. And if you set your resistance levels, it's right there. The market's having a hard time going above this area because it came up and bounced, against it. Like came up, bounced, moved back down, came up, bounced, moved back down. So the market, if it breaks this area, it's an uptrend. So right now the market's in a downtrend. Even though you see it going back up, you might say, well, no, it's in an uptrend. No, overall, right? Looking at the monthly, it's a downtrend. It's really important to pay attention to that because the higher time frames gives you everything you need to know. All right. But now when we go down to lower time frames, we've already set our resistance area. We're saying that if the market goes above that area, it'll be an uptrend. It's got to break it, right? So right now it's trending higher, right? And all we call that is a retracement. So if you're not familiar with the retracement tool, it's really important that you pull that out and take it from the top of the market to the bottom of the market, and try to just, make a prediction of where the market might bounce off of. So if we put it like this, we're already noticing that the market's at this 0.68 spot right there, which is a key area where the market can go ahead and go back down. Okay, as you can see with this candle, last candle on the right, we notice that it's already developing a down candle, a reversal right there. Okay. All right. So 0.79 is another area to pay attention to. It may go up to this point here. It may go back up to resistance area, bounce off and go back down, and continue its downtrend. Okay. So those are the three areas that I'll definitely pay attention to. All right. 1, 2, 3. Okay. But if it gives you a bearish engulfing candle, and this candle's become bigger than the candle previous before it, then that's when you take you want to place your trade based on your indicators and so on and so forth. So again, we mark up the candle. I think I'm going to run out of time because the recording time frame. Just a recap of what I've done previously. You can rewatch the video. And we put our markers again, weekly, then we go down to the daily, we adjust everything. Okay. Right, adjust everything. Go down to the 4 hour. Okay. As we can see, downtrend, right? And overall, the market's a downtrend. So look at that. Right. So is there any gaps? Because you don't want to enter the trade right there. You want to enter the trade when it retouches back towards the gap. Okay, so you put a box where you think the gaps are. Right? There's no gap here because these wicks are touching. No gaps there. Okay, but there is a order block right there. Okay, so you wait for it to come back up and touch this order block right here. You place your trade somewhere around here, and then you continue to ride downward. That's what I'm looking for. We'll be looking for another bearish engulfing candle up in the zone here for it to come down. Okay, and that's pretty much what I do. Right, then we go down to the 1 hour, and look at it. It's trying to come back, right? Trying to come back. You have a tweezer top right there. So tweezer top basically means reversal as well. It just pretty much continuous journey going downward based on this tweezer top. When you see a tweezer top and the white candles outside the white candle, it means reversal. So I might go ahead and do the reversal at the open. And we continue to go down to the lower time frames. As you can see, that tweezer top, yeah, there you go. Tweezer top turned into a shooting star, falling star right here, right? And if you would have saw that, you could have got in the market right there in the 30-minute. And then we look at the 15-minute, 5-minute. All of this is an indication of what's going on, right? That's why we always look at the higher time frames. You go to the lower time frames, and that's when you can see where you can enter. All right. There you go. Boom. All right. So practice that, on a regular basis. Back test, back test, back test, and try to take it, advantage of these opportunities that are, starts to develop within the market. All right. But for me, I would wait for it to come back to this area. See, there's a gap right there. There's a gap between this candle and this candle. It's a wick. It has to touch. So in essence, the market has to come back and fill this gap right here. It's got to fill this gap before it goes back down. Okay. And that's what I'll be looking for. All right. Okay. So with that being said, I want to thank you guys for watching today's training. Practice, rewatch the video, share it with your friends, like the video, give me a thumbs up, and subscribe to the channel as well, because I'm going to go and put this on my YouTube channel. With that being said, let's chat it up in the chat room. And let me know what you like most. And if you got any questions, go ahead and put a question in our Facebook chat. And if you're not part of the Facebook chat, just reach out to me and I'll add you. All right, everybody. Thanks for watching and enjoy your day.